2012. Tesla is small, risky, unstable. Most investors do not believe in it. You have $1,000. Not a fortune, but enough to change your future. Tesla stock trades around $6. Cheap. Suspiciously cheap. And that makes it terrifying. Headlines scream uncertainty. Analysts doubt. Critics laugh. It will not survive, they say. Your finger hovers over the buy button. Heart racing. Mind calculating. Fear whispering. You press buy. $1,000 becomes Tesla shares. The journey begins. At first, nothing happens. The chart barely moves. Doubt slowly grows. Then it drops. Minus 10%. Minus 20%. Panic gets louder. News turns negative. Tesla is burning cash. Bankruptcy risk rising. Your hand moves towards sell. It feels logical. It feels safe. But you pause. Breathe. You invested for a reason. Months pass. Volatility continues. The chart swings wildly. So do your emotions. Elon Musk makes bold promises, big risks, massive ambition. The market mocks him. Doubters get louder. But Tesla keeps building. Then something changes. The stock begins climbing, slowly, unevenly, but steadily. Your $1,000 becomes $1,200, then $1,500, then $1,800. Confidence grows, but so does fear. What if this is the top? Another drop. Red candles everywhere. Analysts predict disaster again. Your profit disappears. Numbers flash red. Emotions spike. This is the moment. Sell in fear, or hold through chaos. You decide to hold, not because it feels safe, but because you believe in the vision. Years pass, production expands, factories grow, the mission becomes louder. The market slowly begins to notice. Skepticism turns into curiosity. Model launches succeed, demand increases, the story starts changing. The stock accelerates, momentum builds, investors rush back in. Your $1,000 becomes $3,000, then $5,000. Friends who doubted you start asking questions. Should we buy now? Media tone shifts from criticism to cautious optimism. The chart moves faster now. Volatility remains, but direction is clear. Your investment crosses $10,000, and this is only the beginning. Tesla becomes a symbol, innovation, disruption, a new era of transport. Short sellers panic, some cover positions, the squeeze fuels momentum. The stock surges again, sharp, explosive, unbelievable. Your original $1,000 now feels unreal. It keeps multiplying. Doubt turns into conviction. Fear turns into patience rewarded. The company reaches global recognition, factories across continents. Analysts revise targets, ratings improve, narratives flip completely. Your portfolio crosses $20,000, then $30,000. The chart looks parabolic. Momentum feeds momentum. From $1,000 to life-changing money, all because you did not quit. The world is now watching. Tesla is no longer a joke. It is a movement. Retail investors flood in. Social media explodes. Everyone is talking about it. The stock splits. More shares, more accessibility, more excitement. Momentum accelerates again. Charts look vertical. Headlines turn euphoric. Your investment crosses $50,000, from $1,000 to this. People call you lucky. They did not see the fear, the doubt, the waiting. Volatility still hits. Sharp drops, sudden pullbacks. Nothing moves straight up. But this time you are calm. You understand the game now. Innovation continues. New factories, new technology, bigger ambition. Your portfolio touches $70,000. The scale feels unreal. You remember the panic years, the red days, the sleepless nights. Most people sold early, Most people could not handle volatility. Patience separated investors from traders. Vision separated believers from doubters. Risk was always there, but so was opportunity. Your $1,000 approaches $100,000, and suddenly it is not about money anymore. It is about mindset. Long-term thinking beats short-term emotion every single time. Markets reward conviction, but only if you survive the chaos. From fear to discipline to exponential growth. Tesla becomes one of the most valuable companies in the world. Unbelievable, historic. Your investment crosses $100,000 from just $1,000. The chart looks almost unreal, a near vertical climb, pure momentum. Financial media calls it revolutionary. Critics now call it genius. The same people who doubted it now wish they had bought earlier, but you remember the fear, the uncertainty, the moments you almost sold. This was never easy. It only looks easy in hindsight. Massive rallies, violent corrections, emotional roller coaster. Yet long-term conviction turned volatility into opportunity. Your $1,000 is now life-changing capital. What if you had sold in fear? The story would be completely different. Most investors never see exponential growth. They exit too early. Big rewards demand big patience and emotional control. Markets test you before they reward you. Every drop was a question. Every rally was an answer. Tesla was not just a stock. It was belief in the future. Innovation creates volatility. Volatility creates fear. Fear creates opportunity. The difference was not intelligence. It was endurance. One decision, $1,000, one long-term mindset, and suddenly the impossible becomes reality. Now imagine the other version of you, the one who sold early. He locked in a small profit, felt smart, felt safe, felt relieved. Then he watched the stock keep rising without him. Every rally hurt. Every headline reminded him what he missed. Fear protected him from loss, but it also protected him from greatness. This is the silent cost of selling too early. The market does not reward comfort, it rewards conviction. Volatility is the price of admission to exponential growth. Most people want massive returns. Few can tolerate massive swings. That is why extraordinary outcomes are rare. Tesla was one example. The principle is bigger than one company. Every generation has its disruptive giants. But in the early years, they always look fragile. Uncertain, risky, overvalued, overhyped. And that is exactly when opportunity hides. Not in comfort, not in clarity, but in doubt. The crowd seeks certainty. Investors seek asymmetric risk. Long-term wealth is built in moments of discomfort. Discipline beats emotion. Strategy beats impulse. And time multiplies what patience protects. Time is the real multiplier. Not hype, not headlines, not excitement, just time. Compounding works quietly, slowly at first, then suddenly, almost violently. In the beginning, growth feels small, almost disappointing, almost invisible. But over years, small percentages stack, layer by layer, year after year. That is the power most investors completely underestimate. They chase quick wins, fast trades, instant gratification. Yet real wealth compounds in silence, while nobody is watching. Tesla did not explode overnight. It survived pressure, doubt, criticism. Years of volatility tested every shareholder's conviction. And patience slowly transformed uncertainty into exponential scale. Your $1,000 crosses $200,000 and keeps climbing. The numbers feel unreal, almost disconnected from reality. What once looked reckless now looks visionary. But it was never obvious in the moment. It was uncomfortable. Clarity only appears after survival, after doubt, after fear. The market rewards those who stay longer than the noise lasts. Short-term fear transfers money from the impatient to the disciplined investors. Every correction felt permanent, but none of them were. Every panic seller believed they were being rational. And you chose something harder. You chose long-term conviction. Step back and look at the journey, from doubt to dominance, from risk to exponential growth. Everyone saw the same headlines, the same charts, the same volatility. The difference was emotional control, staying rational while others reacted. Markets amplify fear in crashes and greed in rallies. Long-term investing demands stability when everything feels unstable. Volatility was temporary, innovation was structural. Most people watch price, few study trajectory. Short-term charts create stress. Long-term charts reveal transformation. What looked dangerous early later looked unstoppable. Only those who endured discomfort captured the upside. Every great investment begins with uncertainty. If it feels safe, the upside is usually limited. Asymmetric opportunity hides inside doubt. The crowd waits for proof. Investors act before certainty. By the time it feels obvious, most gains are gone. The $1,000 decision was small financially, huge psychologically. You learn to tolerate volatility without abandoning conviction. You stayed consistent while others chased headlines. Exponential outcomes require ordinary decisions held long enough. It was never about the money, it was about mindset. Now imagine applying this mindset beyond one company. The principle stays the same, even when the names change. Innovation always looks risky before it looks obvious. Early believers carry uncertainty others refuse to hold. And that discomfort becomes their competitive advantage. Most investors search for certainty, but certainty removes upside. High reward lives on the other side of temporary doubt. Patience is not passive, it is controlled conviction. Discipline means staying consistent when emotions fluctuate. Time turns volatility into opportunity for those who endure. Your $1,000 became life-changing because you stayed. Not because you predicted perfectly, but because you did not panic. You accepted risk as the price of asymmetric potential. You understood that growth is never a straight line. You let time do the heavy lifting. Most people quit before compounding accelerates. You lasted long enough to see the curve bend upward. And once it bends, momentum does the rest. The hardest part was never buying, it was holding. And holding turned a simple decision into exponential impact. This was never just a stock chart, it was a test of character. A test of patience, discipline, and emotional control. Most people fail not because they are wrong, but because they are inconsistent. They change strategy every time the market changes mood. But conviction requires stability when everything feels unstable. Tesla rewarded those who endured uncertainty longer than others. The opportunity was visible, but only for those willing to hold through fear. Great investments rarely feel comfortable at the beginning. Comfort usually appears after the growth has already happened. And by then, the exponential phase is often behind you. $1,000 was never the real story. The real story was mindset compounded over time. A simple decision, protected by patience, scaled by time. This is how ordinary investors achieve extraordinary outcomes. Not by chasing hype, but by surviving volatility. Not by predicting perfectly, but by staying consistent. The market transfers wealth from emotion to discipline. And discipline is built in moments of doubt. So the real question is not what to buy. The real question is, can you hold long enough to win?